Forced to work from home by your employer? Laid off or feeling depressed at home? Do you want to make money working from anywhere? We'll show you how to do it from your couch. It's time for another episode of the Work From Home Show. Coming to you from their homes in Austin, Texas and Tampa, Florida, here are your hosts, Adam and Naresh.
Welcome back to another episode of the Work From Home Show. I'm Naresh with Adam.
Hey, everybody.
And back with us for part 2 of his interview, Wayne B. Titus III. He's CPA, PFS, AIFA, founder of AMDG Financial and AMDG Business Advisory Services. He is a best-selling author of The Entrepreneur's Guide to Financial Well-Being. And today, he's on our show to talk about the nitty-gritty numbers, business tax structures, incorporations, DBAs, LLCs, 1099 versus W-2, the CARES Act. We're going to get into some really, really fun stuff, but it's very important, valuable stuff because so many people make mistakes when they start out freelancing or independent contracting or starting their business. So Wayne is here to help clear all that up. Wayne, welcome back to the Work From Home Show.
Naresh and Adam, thanks. I'm glad I survived round 1.
Yeah. So let's get right into it. As far as incorporations go, how about you share the different ways that our listeners can incorporate their companies, when they should incorporate their company, especially if they're working from home?
Sure. I think there's 2 things to understand. First is there's the legal aspect of formation of businesses, and then there's the accounting or tax aspect of forming companies. And they're not exactly a one-to-one relationship. So, when you have a legal corporation, you can file an 1120, which is a corporate tax return, but you can also elect to file as 1120S, as an S corporation, or sometimes as an LLC. So you have different aspects between the two. I'm not an attorney. I can't give you legal advice on what you should file, but we can talk about kind of the different examples of forming. If you've got a small business, typically you're going to be if you're a sole proprietor, you're going to be filing a Schedule C on your personal tax return. That's a pretty simple schedule. You have business income, you got business expenses, and you've got your bottom line. As you grow, you can elect to be treated differently. Or if you're in a business that has liability, I know, the 2 of you are real estate coaches. I'll give you an example from the real estate industry. If you've got rental property or other property, you're going to want to consider talking with an attorney about forming an LLC for each property. And one of the reasons why you might do that is because you've got a legal reason to put a box around legal liability as it relates to that one property, so it doesn't infect the rest of your portfolio if you have a problem with that one property, right? So you might have different LLCs as an example for the 10 rental properties that you might own, but you may report all of those 10 LLCs on your personal return. So there's some different ways to set things up. It depends on what you think your legal liability might be or how quickly you're going to grow. But tax formation is something to consider as well as the legal aspects.
So whenever people are looking at, starting their business from home, at what point, can you just start with the DBA and then kind of work your way up, or do you have to decide what to do right away?
You can absolutely start as a DBA, and actually most DBAs are registered within the county that you live. So sometimes you have to go down to the county courthouse and register doing business as such and such. And then you still open your bank account in your own Social Security number. You might not want to necessarily do that because you're giving your Social Security number out to other vendors and customers that might be giving you payments or providing you invoices. So what you might do instead of doing the DBA is you might file for an LLC with your state. Most states you can go online and file an LLC. you need to probably work with an attorney to put together what's called an operating agreement. But the LLC will provide you the opportunity to obtain an employer identification number from the Internal Revenue Service that you can use instead of using your Social Security number.
Can you not do that with the DBA? Because I have an EIN, or I got an EIN with my DBA.
I'm not sure how you got your DBA. Was that through your county?
Yes.
Okay, you can apply for a separate tax ID number that's separate from your Social Security number. I guess you can do that with the DBA, but you can also, if you're going to grow and instead of filing your income and expense on your personal tax return, you might decide to opt into an S corporation situation. And your question was like, what size maybe do you do that? You can start off with a DBA. You can start off as an LLC. I started off as an LLC. I didn't actually do a DBA, but I did 2 LLCs for both companies. We, had zero income to start with, and I just knew that the businesses were going to grow, and it wasn't as big of a deal to start an LLC, back in 2002. So I started 2 of them, and then adopted filing as an S corp. And you should talk to your advisor about whether you should file as a Schedule C business, whether you should adopt and file as an S corporation. Typically, when you're smaller, it's a little bit easier if you just do the Schedule C until you're sure that the business is up and running. Then you can kind of step into that LLC and operating agreement, and then determining whether you're going to file as an S corp, or if you have a business partner, you're going to file as a partnership.
I want to backtrack a little bit because I think we might have jumped the gun. What is a DBA? I think a lot of our listeners are probably going to be asking, what is this acronym that I've never heard of? So what is a DBA? Why should someone file for a DBA? And then going even farther back to your statement about real estate investing, what's the benefit of having one LLC for each property versus, let's say, one LLC for all the properties?
Sure. So let's talk about the DBA is doing business as. So if you started your business, my business was AMDG Financial. If I was going to start my business as Wayne B. Titus III, it would be my name. But if I wanted to do business as AMDG Financial, I'd have to go to the county and I'd have to register a DBA. Wayne Titus is doing business as AMDG Financial, right? So that's kind of the smallest level, or the smallest level of business, registering a business name. Beyond that, then you can step into actually registering with the state. Most states do it the same way. You can actually register with a state, and you would file a business with the state, and you could file as an LLC. You could file as a corporation. There's different entities that you could file as, but you'd actually register at the state level.
But what are the benefits of that DBA? Like, why do that when you can just go straight to incorporating a LLC or S corp or C corp or a corporation?
Probably the cost involved. There's really very little cost involved in filing a DBA. If you're going to file an LLC, like in the state of Michigan, if you want to be an LLC, it's a $50 fee. And then really to truly conform, you should have an operating agreement, which needs to be drawn up typically by an attorney. And so you're talking about, $1,000, $2,000, $3,000 to draw up an operating agreement. So the start of, starting your company, goes from maybe $15 to register the DBA with the county to, a couple or a few thousand for the LLC.
Yeah, you're looking at, I think I paid like $15 and I got like 10 years worth of time with the DBA. Now, for people who maybe aren't going to start, I think we need to kind of differentiate here. Just because you're working at home and not working in the office doesn't mean that you're starting your own business. Can you talk about the differences of what you can get tax-wise from working from home for your employer versus working at home with your DBA or LLC or corporation?
Yeah, so you're really talking about like if you're paid as a 1099 contractor versus being paid a W-2?
Yeah, that'd be part of it.
Okay, so let's talk about that. If you're working at home and you're taking on contract work and you're going to get paid a 1099, you're really in business for yourself, right? You're earning business for yourself. All your expenses are your own. The person or the entity that you're working for is just paying you for the product that you're producing for them or the product that you're providing. And so, the benefits of that are that you can offset some of that income by, putting money in a retirement account, just as if you're working for another company. Sometimes the amounts that you can put away when you work from home are significantly higher than when you might work for a corporation. You can cover some of your expenses if you have an office in your home. You can use, if that home office fits the criteria that the Internal Revenue Service puts out there, you can actually cover costs of your real estate taxes, your utilities, your maintenance. All of that is allocated to your office expense, and you can use that to offset income as well. So you have more cash flow coming in, and you can offset some of those expenses that you otherwise couldn't offset if you were working for a company. If you're working out of your home office as a W-2 employee, typically you're not allowed to deduct expenses of your home office. But again, you have to talk with your CPA about, or your tax advisor on what you can deduct. But typically, you're not allowed to deduct, those kinds of business expenses. So those expenses are your own. If you're incurring expense, you can't take it against W-2 wages.
Going back to the DBA, I'm going to make a statement, and I want you to kind of nitpick at it. But essentially what you're saying is, if you're making a certain amount of money, let's say you're making more than $50,000, it would be a good idea to go ahead and incorporate that kind of $50,000 freelance business, for example, because you'll have better tax benefits than just continuing to do business as a DBA.
I think the business benefits, if you're working for yourself, it doesn't matter whether you're a DBA, you're going to file a Schedule C, you would be able to deduct some of those expenses on your tax return, but you wouldn't necessarily be able to deduct others. So by having a business structure and by taking your business seriously, you're demonstrating to the Internal Revenue Service that the expenses you're incurring are business expenses. That doesn't mean that they're not business expenses when you're a DBA. It just probably legitimizes things more. If you've got a $50,000 business, you can certainly file a $50,000 income and related business expenses on your Schedule C as a DBA. But you may need some legitimacy. There's a lot of companies out there that won't do business with a DBA. They will want to be doing business with an LLC, a legal entity that's recognized by the state. So that would be the reason why you might actually incorporate sooner than maybe, sticking with a DBA for longer. Is maybe you'll find some vendors aren't going to deal with you as an individual. They're going to want specifically an LLC.
So whenever you do make your LLC or your corporation, do you have to specify what you're doing with it, or can you do a wide range of things? Like, for example, if I make Adam Schrader LLC or Adam Schrader Corp, and I want to do audio editing, web design, real estate coaching, and maybe a couple other things, can that all be under one business, or do I have to start one for each?
No, you could absolutely do it under one business. The question would be whether it's advisable to do that. And sometimes that's a legal question. From an accounting perspective, it doesn't matter. From a tax perspective, it doesn't matter. But from a legal perspective, it may matter. So go back to the kind of the real estate example that we were using before. You might want to insulate liability and have separate entities. Because if, as an example, you had assets in your Adam, to your example, you had a web design company. And let's just say you had a bank of servers, that helped you do these designs. If you had somebody that was renting in your rental property that, had a person get scalded by the hot water heater, if that real estate is in with the servers in the same business and they sue you, they can basically take claim against any of the assets within that business entity. If it's separate, you're isolating that liability to only the assets in that company. And so that it becomes a legal question about whether it makes sense to have all of those things combined under one LLC or whether you actually want to maintain them separately. From a tax and accounting perspective, it doesn't matter. From a legal perspective, though, you need to get guidance from your attorney on it.
Got it. Okay. Now, can you tell us the difference between C Corp, S Corps, and LLCs and what's right for each individual?
Well, I can't tell you what's right for each individual, but I can give you an overview and then give you some examples of why you might pick one versus another. Sure. A C corporation is kind of the corporation, right? It's the Inc. that you see after the company's name, right?
They're going to have the commercials on TV.
Well, they could. But for most people, you don't need to have a C corporation, right? An Inc. You don't need to register a business with Inc. as incorporated. Most businesses now do file for limited liability company status as a legal structure. That limited liability status can have shareholders or interest holders. So if you have more than one business owner, you can accommodate that within the LLC structure, even to the point where it's just like a partnership. There's an operating agreement and there's numbers of shares or percentage interest owned. It's a really flexible structure. I love the LLC. And for most people, that LLC is going to probably be the predominant form of business because it can grow with you. And the LLC can actually adopt S Corp treatment under the tax code, or it can remain as a Schedule C on your tax return. So let me give you an example of that. When I started my businesses, they were LLCs, and I still filed a Schedule C attached to my individual tax return. As I started to grow, I started to think that the best tax structure for me was to become an S corporation in my businesses. So I adopted S Corp status, but I was still an LLC. Nothing changed from a legal perspective. Remember, at the very beginning of the conversation, I said there's two things that happen. You've got the legal status and then the tax status. An LLC can actually move through these different tax statuses without changing your legal structure. It doesn't always work in the opposite direction. Okay. So you could file the LLC, you can file your tax return as a Schedule C business, you can elect to be treated as an S Corp, or eventually you can actually become an incorporation. You can also be a partnership. So I've seen in the real estate world, I've seen a lot of people start an LLC and then they may bring in a partner, and they may be a situation where they were filing a Schedule C. Now they bring in a partner. Now they're filing a partnership tax return instead of filing on their Schedule C businesses. Or they could adopt to file as an S corporation, and then the S corporation would issue K1s to their shareholders. So again, the LLC, I think, is probably the most flexible legal structure out there. And that might not be great for everybody, but I think that's probably one of the most common legal structures and potential flexible tax structures out there.
Well, I should let our listeners know. So I have one S Corp and one LLC, and both we'll get into the PPP government CARES Act programs and how those tie in. But my S Corp is really my Krish Media and Marketing, my media and marketing consulting business. And I spoke to my accountant when I incorporated it, 7 years ago. We had a 5-minute conversation. He asked me what I wanted to start, what industry it was in. And he basically said, I recommend you do the S Corp, and we can handle that for you. And I didn't think twice about it. I was just like, okay, if you say I should do an S Corp, I'll go ahead and do it. In the case of my LLC, that's for my real estate properties. I'm not sure why. Maybe you can answer this, but my accountant again said, I recommend that you start an LLC, but you need to bring in a partner who's going to own at least 10% of the business. So I just got my dad to sign the paperwork, and now he's 10% partner, even though he doesn't do anything with the business. But that's what my CPA recommended for the real estate properties. Any thoughts on that?
Yeah, I'm not exactly sure why what the impetus behind your CPA making the recommendation is. Maybe he knows something that I don't know about your personal situation, but it could be in order to protect the assets of the LLC, the real estate assets. If you've got another shareholder, that may have a claim, it would be harder to alienate your properties out of your LLC if you were sued or something like that. I don't know. There's probably a legal aspect and a reason why he suggested that. I don't understand from an accounting perspective why he would make that recommendation.
So you don't have to have a partner to start. You can start as a single person LLC and bring in more partners later.
Yeah, absolutely. Yeah, and I've seen that quite a bit.
Right.
All right, that's going to do it for today's episode. Thanks to Wayne B. Titus III, CPA, PFS, AIFA, founder of AMD Financial and AMDG Business Advisory Services. Wayne will be back with us on Friday to wrap up our week with the CPA. Don't forget to check out his best-selling book, The Entrepreneur's Guide to Financial Wellbeing. Check him out at WayneBTitus3.com. That's Wayne B. Titus, Titus, the number 3.com, or at amdgservices.com. If you want to reach out to us, head on over to workfromhomeshow.com or send us an email at hello@workfromhomeshow.com. Sign up for our mailing list, get a free copy of Naresh's book, 50 Shades of Marketing, and give us a review on whatever podcast platform you're listening to. And don't forget, until next time, keep on working from home.